Germany, the Europeans, the UK, the US are all looking at various forms of sanction if there is an incursion. What is the probability, in your view, that there is a form of incursion, and what will be the biggest consequence of that for energy markets in Europe?
So there will be some form of incursion. I would say 80, 90%. I think we want to ask, though, what is the risk that we have an incursion that triggers punishing sanctions? And on that, I'd be lower, Manus. I think it's around 30%. I know that's a little lower than most folks. We think Putin will pull his punches, and the West, certainly the Europeans, are in no mood to want to put punishing sanctions in place. So we put it about 30%. If he does that, if we're in that 30% world, tanks have crossed the border, it's real. The president has already signaled the sanctions are coming in the technology area, in the financial area, not the energy area. That's why I think from an oil perspective, certainly, the risk here is not bullish for oil. I get it. It's a knee jerk. You buy oil if you think there's going to be a war, but very unlikely to see an interruption in that 4.7 million barrels a day of crude and products that Russia sends to Europe and ex-China, Asia, and the United States. Very unlikely. Neither Putin wants to cut that up, nor do we. So you have to have a worst-case scenario, a war, sanctions that are very unlikely to see that cut off. Gas is another story. Natural gas, especially the transit gas through Ukraine, that could have an accident, and Putin could claim deniability. He could say, I had nothing to do with it, but suddenly that disappears. Yeah. So with natural gas, it's more likely. I still think it's very likely, but more likely. But oil, it's more of a macro bearish driver than a bullish one, I think.
Bob, I mean, there's always the risk of fanning the flames of the geopolitical risk premium, which some would argue is kind of faded a little bit. There's a degree of complacency, a degree of taking energy supply for granted, a lack of investment in some new infrastructure to provide for the energy of the future. How do you expect OPEC to react to this kind of geopolitical rise in tensions, given that they meet on a monthly basis now pretty much, OPEC Plus, kind of the central bank of oil? How would they respond?
Well, in some ways, and I hate to say it as an avid OPEC watcher, as the market tightens and we enter a structurally tight market, OPEC or OPEC Plus becomes less important and geopolitical risk becomes more important. And it's all a functioning of that shrinking spare production capacity, now below 4 million barrels a day. And, we're going to go back to 2010 to 2014 where they met, they did nothing and no one really cared. I'm not going to say it's going to get that boring. But really, OPEC Plus, they just sit there. They have to tap out and increase by 400 KBD, and those few countries with spare capacity will increase. But on this track, they're going to become less relevant in some ways. They're going to do what they're going to do. They're managing the market very well right now. But it's that shrinking spare that makes every barrel of disrupted capacity or disruption bullish for the crude oil risk premium. So that's why I think that the Houthis shot missiles and drones at Abu Dhabi in some ways is much more important than I think even the risk posed by the Russia-Ukraine crisis when it comes to oil.
Now, that's interesting. So how nervous should we be? Because we've had various people come on the show with Yousef and I say, stop panicking. This region has been battered by Houthi rebels on a number of occasions for many, many years. The risk is it's a tight market. But what are people saying to you the real risk is for UAE oil?
Yeah, we've had talks with folks about that. So let's go a scale of 1 to 10. A 10 being we'll see another equivalent of Abqaiq and Kuwait, September 19, where Iranians, forget about the Houthis, Iranians target and hit the most valuable oil infrastructure on planet Earth, in this case, Saudi Arabia. Let's say, and a 0 is a nothing burger. Everything's peace and holding hands and so forth. I think we started at a sort of a 2 to a 3. And with this new attack, with these missiles and drones by the Houthis into Abu Dhabi and a military base, we're probably up to a 3 or a 4. They used more advanced weapons they had to have gotten from Iran. However, had Iran or they really wanted to destroy important infrastructure, they could have, and they didn't. So we're not at a 10, we're not at a 9, but the Houthis have suffered a setback on the ground. The UAE and the Saudis have successfully pushed them back, and so they're on their back foot and they're retaliating. But I think we're at a 4 here, Manus. I don't think we're anywhere close to that September 2019 Abqaiq attack. We're not quite there yet, and I don't think we're going to get there. I think we're going to go to a higher level of escalation and tensions, but I don't think Iran or the UAE and Saudi Arabia certainly want to escalate from beyond there.
We've got quite a few houses raising their forecasts. Bank of America is now looking at $120 a barrel in 2022. You had Barclays move as well. I mean, I'm losing track. We need like somebody full-time just to track like the amount of upgrades the price forecasts are getting. Bob, do you agree with a view that, okay, sure, it might not last long above $100 a barrel, but would it break through it at least temporarily?
Near term, we don't see it. But, I've been telling my clients for years, when the market turns structurally bullish, I will be the biggest bull you know. We are going to blow through 100, 120. We're going to recessionary levels, we think around 150, but not yet. We're not tight enough yet. I think this strength is going to reverse. I think we're going to build inventories. I think we're going to see a lot of oil come out of Saudi Arabia and the UAE this year and the US. I think there are macro risks that are going to depress prices. And our view is that Iran, we're more likely to see a deal with Iran than a war with Iran. So our base case is we're headed more towards the 80s and the 70s later this year. You have to wait a little longer, but it's coming. The boom cycle is coming. A 150 is coming, but not yet. I don't think it's fundamentally justified this year unless we have a major geopolitical disruption. And here I would look to Iran as the biggest risk.